Hi, welcome to this video day, which is on the 2nd of January, or Monday. In today's video, we're going to be looking at some NZD pairs. We're going to be looking at NZD against the USD, JPY, CAD, and CHF. We'll go over to the charts in just a moment. Now, in my last video, I covered NZD, JPY, and that is already in a downtrend. I expect the NZD to turn lower in the other three pairs we'll take a look at today as well. We see significant downside potential against low risk. Speculators are heavily long of the Kiwi, and in terms of the good news for Kiwi, I think that's now discounted. Now, in terms of the logic of the trades and the key levels of support and resistance, we'll go over to the charts in just a moment. Before we do so, if you want to learn our trading strategy, learn all our trading techniques, as well as check out our daily technical sentiment analysis of 14 FX pairs, all you need to do, go to the link beneath this video and you get live access to our member center. Our live access will shortly end, but you can lock it in right now if you wish. You can also follow our research on our daily blog, check out our Facebook group of traders, and also follow our Facebook page. Right, let's go and take a look at the trade setups. First one will be NZD USD.
All right, just the first chart is NZD USD weekly chart, and let's just see the big picture. Before we go to the daily chart, draw levels of entry, stop and target. Now, in terms of the Kiwi, back in March 2022, we get up to the 70 level, full short covering rally, full, another short covering rally, full, below the 56 level. Then we mount a really impressive rally of well over 800 pips, okay? Now, in terms of this candle tail here, that poked up to the 65 level. That, I think, is exhaustion of the buying, and 64 should hold rallies. Like the two bodies I'm highlighting here, and then this candle tail over here. Why I think that's the exhaustion of buying is to do with speculative positioning, which we're going to look at in a moment. We're just moving a little bit sideways at the moment. I think 64 will hold rallies, and we should retrace a significant portion of this rally. Okay, now in terms of speculative position, let's have a look at it. COT Net Traders report, which shows positioning of two groups on the IMM futures markets. It's real money positioning, commercials and large speculators. I'm only going to go through very briefly how we use this report. For new viewers who are unfamiliar with the COT, check out our video COT Net Traders indicator. Now, what we're looking for is big divergence between the two groups or a rapid change of positions. Now, in terms of commercials, they are hedgers. They will only move positions aggressively if prices move too far from fair value. They own the cash, so they're not going to make or lose any money. Large speculators, basically influenced by greed, fear, they will be right about long-term trends a lot of the time, but they'll normally be wrong at big turning points. Okay, now what I want to do is highlight this over here where we get the bottom into 56. The hedgers come in, they keep building their long position. They go heavily long against the specs. Then you can see we push up from 56 up to 65. Now both groups lighten their positions, okay? But what happens into 65 is the commercials make a big move from long to short. Speculators make a big move from short to long. Now, in terms of 65, I do not think that level will be tested. I think 64 is the resistance. Of course, anything can happen. But why have those two groups done that big move, from short to long and long to short? What I'm going to do is now go to the daily chart. I'll just give you quickly why I think they've done it and why I think the speculators who have come in long are going to get taken out on stop. Right, let's go to the daily chart. All right, NZD USD daily chart. Speculators have bought into the 65 level. We've since come below the 64 level. Not much volatility at the moment. There's two ways you could play this trade, on a break higher or break lower. We'll go through the levels in a moment. But why have speculators come in heavily long and commercials gone short against them? I think one reason is the RBNZ. They're seen as the most hawkish central bank. They've got an interest rate of 4.25%, but the market sees rates peaking at 5.5%. Some more interest rate hikes to come. They see the Fed peaking at 4.9%. So the Kiwi has got the interest rate differential, but I think that news now is getting priced in. However, the Fed have indicated rates will probably peak well above 5%, 5.25 to 5.5. The market doesn't believe them. So I think it can only get better for the USD. A non-farm payroll on Friday, you get a good one. That may see the market reprice how high the Fed might go. Now, in terms of another reason, I think it's probably the bigger reason. China relaxation of COVID restrictions will boost the economy. That's the consensus view. Okay, what's good for China is good for New Zealand. Obviously, New Zealand huge exports to China. But I like this quote here from Cameron Johnson at Tidal Wave Solutions. He says, "Most factories I know are well below where they could be this time of year for orders next year. A lot of factories I've talked to are 50%. Some are below 20%. That's a huge drop in orders, isn't it? So even though China is opening up, manufacturing is still going to slow down because the rest of the world's economy is slowing down. Factories will have workers, but they will have no orders." China's an export-led nation. Its markets are drying up. Internally, you've got huge problems with debt. You've got a housing crisis. I've done an article on our blog on my bearish view of China, which you can check out. So I think the bullish view on China is a bit misplaced. But even with that bullish view, you see most forecasters have got it. The Kiwi has fallen back. Now, in terms of trading, okay, I'll go through what you would do if it goes higher in a moment. I just want to go through a break lower. Just drawn this trajectory up, and then there is the support at 64. You can see us trying to get and hold the level on these candles here, get above it there, push up, and now we're coming back down. If this level gives way, okay, then I'll be looking for a significant move to the downside. In terms of how the groups are swapped over and our experience of the COT net traders, I'm going to say we should get to the 60 level. Okay, in terms of stop, I think, sorry, I got my line straight. I think you could just be behind that tail there, okay? Because if we break low, you're looking for the specs that get hit. So down towards the 60 level. And then I think we should get a run on to 58. Okay, so the risk reward, if our view is correct, is obviously very, very good. You could also take a flick up towards this level here, 64 level, and then sell on weakness with a stop behind the bodies. Okay, I don't think you need to be behind that tail. So break higher or break lower. So yeah, that's NZD USD. We've gone through the NZD fundamentals in detail. So let's do the other three trade setups and we'll do them fairly quickly. I'm going to start with NZD JPY. Right, the last three charts from our member centre. Now, in terms of this pair, I did cover it in a video last week. The NZD really had a nice fall there. That is just a natural retracement. We thought we'd get to 85 and 85 would hold the rally. And we've sold off quite nicely, just over a few hundred pips. Now, keep your eye on the monthly support. We're heavily bullish of the yen. You can check the video before this one why. But in terms of, yeah, big fall. But if we go back towards this level here, it's a sell on weakness. Stop here or behind this level. You can see my stop at 83.60. We should get to 81, then down to monthly support at 76. The yen deeply oversold. Okay, so if you wanted to just wait for a bounce, then take it short on weakness. Next pair, I don't know if I said earlier, but speculators are heavily long the Kiwi in all these three crosses that I'm looking at. I'm going to NZD CHF. We do fall. Now you've just got tight sideways action. The way to play this one, break out below 58.15 if you're coming in fresh. So below the tail low. If you come in below the tail low, you can pop your stop behind this first level resistance and then look for a move down to 56. Okay, so another decent risk reward trade. And the last one, NZD CAD. In terms of the NZD, it's been the strongest of the commodity currencies. CAD has been the weakest. I did a video actually when we were up here. We have come down a bit. I think the CAD will hold up well going forward because in terms of exports, New Zealand exposed to China, not doing well. US isn't either, but it's doing better than China. So I think, yeah, Canada's major trading partner is the advantage for the CAD. And also, what is Canada's exports? It's energy. I think energy prices will hold up better than New Zealand's exports. Okay, again, this is quite a simple trade, rallied up, struggling. Okay, just take a break here. Okay, 85.40, go through 85.40, then we should go down to the levels of support that I'm indicating. Initially I'd have my stop behind here, but get a nice spread in your favour. Basically you could bring the stop down, say behind this high here. So this one, yeah, it's shown a bit of topping action. We haven't seen the really big breakdown yet. So the NZD for us, good news is in for it, and yeah, I think it's a good long-term sell. We'll see how these pairs go. I'll update them in my weekly forecast, but that's the video for now. Hope you found it useful. Thank you.